So today we're talking about the wide variation of offer prices when you are looking at a commercial real estate property. So we own shopping centers and we underwrite, dozens of properties every year. We make many offers and we download a tremendous amount of offering memorandums. I have investment sales people, friends that are telling me they're receiving a ton of offers as well, especially today on a lot of strip centers. It's become kind of a favorite asset class. And the question is, why is it that if everyone's looking at the same information, they're coming up with such a wide variety of prices? Meaning that, you're getting the offering memorandum and you're looking at the rent roll, the same rent roll. Everyone's looking at the same rent roll. You're looking at the same property conditions, the age of the property, the roof age, the type of roof, when's the last time it was repainted. You're looking at the same expenses on the P&Ls. You're looking at the same data on the community, the population demographics and the income and the average age and things like that. And so a lot of the stuff that you're looking at is the same. But why is it that the prices, when they go to bid and put in an offer, you're getting, could be anywhere from, let's just say it's a property that they're trying to get 20 million for, you're getting offers for maybe 15, 16, 19, maybe someone goes over 21 million. Why is that? And I think that it has to do with a number of factors. First thing is the hold period. If you're holding for 1 year, 3 years, 5 years, 7 years, 10 years, or 100 years, you're looking at this thing completely different. And then it's also the cost of capital. So if you're buying it all cash, that's one way. If you're buying it with a lot of leverage, that's a different way. If you're buying it as a 1031 exchange, that's a whole nother thing. And it's probably separate from the cost of capital. If you're a bigger company and your cost of capital might be SOFR plus, 100, that's very low cost of capital. If you're highly leveraged and you're trying to, buy it with hard money, it might be SOFR plus 600. That's also that. Then there's execution. So people have different execution convictions, like can they actually lease it up? Can they do the renovation? Can they, come up with a business plan that's going to maximize the value of the property? So just looking at it on its surface, unless it was just all baked and there's no changes to the rent roll for the next 10 years, people are going to make different assumptions as far as who renews, who do they want to not renew, and who are they going to replace it with, and how high can they bring the rent to. And sometimes it's like, hey, I'm going to put money into the property to improve it and then justify an even higher rent. So how confident are they that they can execute? And then there's the I guess it's the assumption of what's the exit cap rate going to be when you go to sell? Is it, if you think that you're going to bring the property up from a B minus to an A plus, you might be bringing the cap rate down from 8% to 6%. If you're kind of keeping it as a B property, maybe it stays at 8%. If you think that interest rates are going to go down, maybe you're building in some cap rate compression. Best practice is to not compress the cap rate unless there's a real reason to, like, something extraordinary, because the exit cap really moves the needle there. And then I think it's your assumptions on the CapEx. Some people use $10 a square foot for the roof. Some people use 15. Some people use 5. And I think that if you're really active in the market, or if you're an underwriter, an investment sales person, or an acquisitions person that really knows the asset management side of it, then you get, much more accurate ways of looking at the cost of these CapEx expenses. Anyways, I just thought I'd kind of give you a little bit of color as to what I've seen as to why there's so much differentiation in these prices when you go to make an offer on a property. And as a reminder, these big properties, like $20 million properties, most of the times, they don't have an offer price. So they just give you the information and you kind of just have to figure it out. And then you get, a wide variety of offer prices. If you have any questions, please comment below. I'm Chen. I've been in the business for about 26 years, own and operate shopping centers, and we're looking to buy some more property. So if you're selling shopping centers, please reach out to me. I'll talk to you later. That are telling me they're receiving a ton of offers.